Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Kurt Lin, co-founder and CEO of Pinwheel, to discuss Fintech 2.0, meeting digital banking to create a more fair financial system. Kurt, it is great to have you with us. Welcome to Trade Talks.
Great to be here. Thanks for having me, Jill.
Let's start at the top here. What is the state of the broken financial system as it stands now?
So the biggest problem I think facing the financial system today is the fact that, especially for the unbanked and underbanked, as well as those who struggle to access affordable credit, the foundational reason for that problem is because there isn't enough data that really helps lenders and banks and fintechs, for that matter, really understand what's going on in the lives of consumers, right? And so the example I always like to give is you may be a nurse or a teacher who's had the same job for 4 or 5 years, you have a really stable income, but you just haven't really engaged the financial system. So you have like a FICO, 550, right? And you can't get an affordable credit product. What we're able to do and what we're excited to solve here at Pinwheel is to say, hey, we actually have the data to show that that teacher or nurse is actually performing much closer to a 750, and all you need is the information around who they are, how much they make, where they work, to really bridge that gap.
What are examples of companies that fit in Fintech 2.0, and how are they different than 1.0?
Yeah, so I think what really defines Fintech 1.0 is that it was just the first step. And the first step in any industry is to just be able to say, hey, like, what are the things that we need to do just to get the ball rolling here? And so you see the proliferation of a lot of these digital banks, neobank companies that have really kind of come to the fore. And also kind of this first wave of PFMs. And I would largely call Fintech 1.0 just taking a first step to understanding who the consumer really is, and really understanding how do I just make that first step that much better, right? So like, how do we make banking just a little bit better than what it was before? And I think what makes Fintech 2.0 really stand out is that it's a major kind of quantum leap forward in terms of really taking what was existing before, but supercharging it, right? And so one of the things that we've been able to see is with all the tools that we unlock here at Pinwheel, whether it's automating direct deposits, whether it's expanding the set of information around a consumer, around how much they make, where they work, we can help these Fintech 1.0 companies take that next step to actually really move Fintech into the next era, where you can help these digital banks accelerate consumer growth, help them really expand their credit offerings by actually giving them new sets of data that didn't exist before.
You know what, Kurt, is so interesting. A lot of the trends that I've been noticing anyway with Fintech is prior to Fintech really making waves in the financial system, that banks told you what products and services you needed. But with Fintech 1.0 and even 2.0, it's more based on what the consumer needs. I think it's a really interesting seismic shift, and to see Fintechs and traditional financial services working together to bring that to the consumer is really interesting. I think empowering the consumer base is really an interesting theme here. So what is it that you're able to unlock where, okay, this person might have a 750 credit score, and what are traditional credit scoring systems not seeing? What are you bringing that they're not?
Yeah, it's a great question. So the kind of core issue that we're tackling here is twofold. One is that if you look at right now what a lender needs to actually be able to approve a consumer for a loan, they need to answer 2 questions. What is this consumer's willingness to pay, and what is their ability to pay, right? Right now, you have FICO scores, which is a proxy and frankly not a good one for willingness to pay, but that's the best we got right now. And there really is this huge gap around, like, no one really understands a consumer's ability to pay. And what we do is we go into all the systems where that information is around, like their payroll system, or if they're a gig worker, like an Uber and Lyft account, really take all this information and be like, okay, let's paint a whole picture to really understand in real time how much this person truly makes, and actually have that source data to actually give to a bank or a lender and say, hey, this is actually the holistic picture of this person. So whereas you used to say no to someone, actually now you have a much better sense of, oh, they actually have very stable income, we should be giving them this loan instead. And it helps kind of expand financial inclusion in that way. And the other really big piece that we're excited about is we're rolling out an earned wage access product that has never really been seen before, right? So if you think about the problem that plagues the majority of consumers who live paycheck to paycheck, they get paid every 2 weeks or every month. They run out of money in between paychecks, and then they're kind of SOL, right? They have to go to a payday lender just to make ends meet. What we actually are able to do for the first time is we connect into the time and attendance systems to actually say, we know when Kurt has clocked in and clocked out of his shift at Chipotle today, we can actually share that information with a bank or a lender or a neobank And they can take that information and say, well, we know this person has already worked their shift today. We also know that they're still currently employed. We can now forward them their paycheck for the day, even though they won't get paid in 2 weeks, because we know they're good for it, right? And that really increases access to the paycheck in a way that has never been done before we existed.
So Kurt, you made a great point before that this economy shifting content creation is it's becoming a bigger part of the economy, the gig economy. A lot of people as a result of the pandemic turn to more entrepreneurial type of work. Is there enough data? Is there enough to back up when you're lending? Is this risk worth it? Is there anything to show, okay, you know what, we took this leap of faith and these people were in fact able to pay off what we're willing to lend them? Is there enough time, enough data to evaluate that this works in the real world when you assess risk and you get your return?
Yeah, so I think even we've been operating since 2018, and we already have a lot of the data to show that, we work with a buy now, pay later provider, and we've been able to show that through partnership with Pinwheel's platform, especially for cohorts of folks who have FICOs of 550 or below, that we can actually increase repayment rates by 3x just by including an expansion of the income data that we provide, along with access to the direct deposit as a way to repay the loan to increase the repayment rate as well, right? So those two levers combined lead to meaningfully better financial outcomes for consumers, where they don't have to rely on predatory products, and also really help the lender build a much more stable business and expand offerings to folks that they normally wouldn't lend to.
Yeah, interesting. I mean, especially as this gig creator and entrepreneurial economy grows, I mean, you're going to have to grow your own business. Kurt, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.